from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today I'm very pleased. Joining me, someone I've met in one of the cohort I was part of. I want to welcome today Cyril Shtabtsovsky. Cyril is the founder of AlphaSemantic's, and Cyril really did great research in the data-driven VC world. I'm very pleased to have you with me today, Cyril. So I always tell my guests the best one who can introduce someone is themselves. So without further ado, Cyril, tell me a little bit more about yourself. This is for the audience, of course, what you've been up to, and then we can start the discussion from there.
Sure, Mehmet. Thanks for having me. So, yeah, you're absolutely right. I've been to the VC cohorts, but then I actually pivoted into service that's called AlphaSemantic now. So we providing services to VCs, making them data-driven, sourcing pipeline using big data and machine learning models. But before that, and still I'm a venture capitalist by living as well. So deploying money, doing some deals. And so that's probably the best way to describe myself. I wear two hats. First, a VC, and second one is a founder of a product for VCs as well.
That's great. And, I'm excited about this discussion today, Cyril. The way, what I like to do with all my guests, especially if you are a founder also as well. So, of course, you have the VC hat, but I love to uncover why you felt there is a need for what you currently do with AlphaSemantic. Like, what are the missings in the market that you felt no one is covering up? So I love to hear these stories. Absolutely,
yeah. So it was a very natural way to break into this stuff. So as I told you, I've been doing a VC. I co-authored or a nice scientific paper where we took data for the startups and predicted their success. It's open. You can go and read it. Probably we can put a link in the description later. So we built this algorithm to find and backtest startup successes and try to raise my fund. But then I immediately realized that there are a lot of funds who cannot do that. So we can kind of share the infrastructure and just provide this as a service to these VCs. A few VCs immediately asked us how we can use that for their own fund. And that's why we pivoted into VC. And then I immediately understood that there is only about 5% of VCs who do some advanced stuff with data. All other VCs do that the old way, like meeting founders in demo days, in cafe, and all that. But they still really want to do this advanced data-driven stuff, and that's, I guess, why we're doing this.
Cyril, just I am not playing the devil advocate here, but doesn't this contradict with the whole concept of a venture capitalist? So a VC, they historically, they have bet on, I don't know, hundreds and thousands of startups, knowing that only few of them will succeed. So now is it like removing this equation completely, or is it like just to justify, the bets that they do on the jockey instead of the horse? So what is the theory behind what you are offering?
Right. Yeah, that's my favorite topic, actually. So thanks for asking. So the thing is that almost all top tier funds, like top 10 VCs that you can name, Andreessen Horowitz, Sequoia, new enterprise association, they all use this new data-driven stuff and platforms. They build it insights or either buy out of the market. They either use it or not. They still use some strong brand that they gained over decades and insider information, but they still use the data-driven and machine learning models to identify and probably bet on startups as well. So it's kind of a state of the art. In 5 to 10 years, I'd say it will still be an insider information game where there is a founder who's cool and he can take your money and you will be the first. But there is still a big room for improvement, such as finding startups emerging out of stealth, tracking their numbers on website traffic, app downloads, and all that. So there is still a long way to go there, and we just fill in this gap somehow. But you're absolutely right. There will still be an insider information trades, and the VC will be just like before, but with some data-driven stuff inside.
Cool. Does that mean it will work after certain stage the startup is at? Because a pre-seed startup would not have any metrics. To your point, probably they are still in stealth mode. So are we talking here about targeting, maybe startups who are ready for Series A? Can we do it for even seed rounds? Like, what is the sweet spot here?
Right. So, yeah, you're absolutely technical and you're absolutely right. The sweet spot, there is some trade-off between some information and some upside left for like venture revelations. So the sweet spot, you're absolutely right, is Series B. And that's what we covered in the scientific paper that I published. We predicted exits and backtested this strategy for Series B startups. So this is the sweet spot, but it still works for Series A, seed, and even pre-seed bets, because again, you can somehow get the signal based on founders' background, their previous experience, their education. LinkedIn and other social networks give you a lot of signals that you can track and somehow backtest the strategy as well. But again, you're absolutely right. Sweet spot is somehow later at the Series B or even beyond that.
Cool. One thing I love to do it on the podcast also as well is going through the journey, right? So let's say, Cyril, I decided to go and choose to use your product, right? What are like some of the prerequisites that me as a VC I have to have before starting using it? And what is I would say how the onboarding looks like?
Right. So first of all, I'm not selling the product. Probably it's not for everyone. But
Okay.
if you're looking for some outside deal flow sources such as outbound sourcing or something, maybe you rely only on inbound or your network, it's totally fine. But in case you want some more deal flow, that's probably for you. So there are like 3 core pillars in the product. First, we built our own semantic search. For example, if you're looking for some specific industries, such as, I don't know, AI first startups and fintech or something, we can, using our own semantic search, relying on databases, search for all startups semantically close to the startups you described. That's the first thing. The second thing, we scrap all the information, we gather all the information about the startups, such as their social network signals, employee signals, probably some internal databases with revenue or some other sort of stuff. And then we just map them using our own algorithm to rank these companies. And third core pillar of the product is that you get this list of top startups. First, they fit your thesis, they're within the industry you're looking for. Second, they're good. We score them using our algorithm. And so you can just click a button and our AI agent will go and send them, generate you a draft of the letter that you can send to founder and ask if they're looking for funding. So that's the 3 core things. If you want to try that, just let us know your thesis and we're happy to try that with you.
Great. So for deal flow, that's the dream of every VC, because usually if we're talking about like an established VC with track record, so you have either some venture scouts out there searching for these startups, or you would be relying on your own ways of attracting, as you mentioned, like attending events, demo days, and so on. Now, the question here, Cyril, let's say if this startup is really super cool, right? And it's like on the rise. And because you pointed that usually we're talking about the sweet spot of a Series B. Now, how much of the pie, me as a VC investing in Series B, I would be able to take, knowing that usually the follow up would come from whoever backed them maybe in Series A. So these will be the bigger backers. So I'm just trying to do this conversation to let also the audience understand the dynamics of how the rounds and the investors who would be involved in each round change sometimes from stage to stage.
So you're absolutely right. So there is a saying that VC has 3 jobs, right? So first, find, pick, and win. So find is about like finding these opportunities that you can back. Second, picking out of all these opportunities that you source, you need to allocate properly, right? So out of, for example, thousands of opportunities you source, you probably need to pick about 3% or something. And finally, the last job of the VC is to win. So, for example, get there first, convince the founder that you have the best value for money that you're putting in. And so that's how the VC works, right? So our product only helps with the first 2, right? So we can, first of all, map all these opportunities that's available for you. Second, to pick those opportunities out of all these list of good opportunities. But winning is all about the brands, about how you talk to the founder and all that. We obviously do not replace the VC, the GP at all. But obviously, it also helps with that a little bit as well, because if you come first, if you see there is the signal earlier than others, probably you have a higher chance to getting into the company. For Series B, you're absolutely right. There is a majority is taken by pro rata or some top tier funds, because Series B, there are not many of them.
Right. Now, one point also, sir, like there's a saying that sometimes you, especially like in VCs, they talk about it, is you go by your gut feeling sometimes. Like I know
Yeah.
like this contradicts, the data-driven approach. But from your experience as a VC yourself, also plus based on the paper, like would that gut feeling actually somehow in the future proves that it's not a gut feeling, it was like some data that maybe unconsciously you as a VC you've spotted on. Maybe it's maybe the background of the founder, which is again, I believe you can quantify this, right? So even if they are on a pre-seed or seed stage, still there are like these signals. We as a human like to be emotional and call it like gut feeling, but I'm sure like you can relate to something with the data later. Like correct me if I'm wrong, or what's your opinion on that?
Well, that's a good question, actually, because again, at the earliest, well, for Series B, it's easy. There's almost no gut feeling, right? So you
Right.
just see the numbers, you see how it grows. You can probably predict something about the market, not like at the pre-seed stage where you have just the idea and some probably market that still doesn't exist. So for pre-seed, I'd say, yeah, gut feeling is probably the number one tool for a GP to find and back startups. But again, if you just try and replicate that with some models, probably can work somehow. For example, there is a nice fund. Probably I should introduce you to the guys called Track VC, US guys, the founder of the funds, as well with his partners called Fred Campbell. They train their algorithm. So they're also a data-driven VC fund. They use algorithms to find and pick startups. They don't do any work at all as a GP. So they train their algorithm based on, let's say, gut feelings of top tier VCs. So they gather this group of different VCs, successful VCs, and they just try to get their feeling what startup is good, what is not, and that's how they build this model they're using right now. So it can be also working the same way. So you can use gut feeling to build a model, and probably vice versa as well.
Cool. Now, if we want to talk statistics, Cyril, like success rate, let's call it, about the exits, and just for, of course, you and me, we know, a lot of people they know, but if someone just turned now and wondering what these guys are talking about, so when we say startup exit success, means either they went to an IPO or they were acquired or merged with another company. Now, when we look at data driven more into details, like we bring our magnifier and start to look into details, how much percent this, I would say, add to a VC who maybe are using just the traditional ways? Like, I'm trying to here compare the before and after state.
Right. So we're trying to compare the hit rate or exit rate for a traditional VC and data-driven VC, right?
Right.
So yeah, it's complicated. I think it differs from case to case. For example, if we compare that with, so let's take our paper, for example. Again, I hope we'll put the link in the description.
Of course we will.
There is the number. So the hit rate, so the right choices this model did, it was 86% right choices. So out of, for example, 100 startups that you choose, the model either says it will be a successful startup, meaning it will go public or will be acquired for a big amount of money, or it will be an unsuccessful startup that you don't need to back. So the success rate here was 86%, but we also did another thing. So we backtested this model using real numbers. So we run these models, simulated the real portfolio of a venture capital fund, like some virtual venture capital fund from 216 to 2022, I guess. I need to look at the numbers again, but there is the paper that you can look at. And we backtested this model. So we simulated picking startups and putting them in the portfolio based on this model. And then we looked what are the numbers. So we took startups at Series B and then looked what went with them. And the overall performance of such fund was 14 times relation to the portfolio, meaning DPI. So there was some TVPI remaining as well. So for the same vintage year, it was about top 5% of the funds, if I'm not mistaken. Sorry for that, but there is the number. So 86% success rate, and again 14 times the relation of the whole portfolio. So it means it's the top quartile venture capital fund for sure.
Cool. Now, the thing here that also comes to mind, and by the way, we're seeing the utilization of data, AI, machine learning in every domain, and VC is no different, right? Now, the thing is, how do you think, if let's say majority of the VC funds are utilizing your tool or any set of tools, right, that gives them this superpower of predicting rightly, how they could because people, they think that startups run after VCs, but it's not always the case. Sometimes the VC will be going after the startup if they are really up to something. So what is the moat for the VC here, right? Of course, there are like the older ones, like let's say in the US, the Sequoias and Battery and Bessemer and all the big names that we know, Anderson Horowitz, Founders Funds, like we can keep going on. So these are like established names, right? So, but maybe for newer VCs, how they would be able to differentiate themselves and actually, attract, startup founders to accept them, to be their backers.
Right. So yeah, again, we're talking about these 3 jobs that VC has. So I think it's all about the brand and some unique access, unique insights. For example, there is like a whole list of VCs that do some really unique stuff. For example, there is a a nice gentleman in Stanford. He's a professor for venture capital funds there, venture capital and private equity, called Ilya Strepulayev.
Yep.
And he, for example, backs his students, right? So he has this high quality pipeline of young people who want to do some entrepreneurship or venture capital. They come to his classes and he finds the most brilliant people there and just invest in them, in their funds, in their startups. So that's a very unique stuff. I'm not sure if there is some model that can do the same, right? Because the model cannot be a professor at Stanford for venture capital and fund these founders that come to him. So I'm not sure if there is a really simple answer to that. So again, the brand is all about that. For new funds, probably I'd recommend finding something very unique that they can do. For example, I'm very excited about deep tech right now because honestly, software companies, anyone can do that right now. You just go to Lovable, other wipe coding tools, and do that even without CTO for the first time,
Right.
like gaining some traction. So I think software will commoditize, but deep tech will not. So if you have some unique relationships with technology transfer offices or some unique scientific group there, probably can be the very unique VC in this specific niche, for example, whether it be quantum computing, optics, AI. Again, maybe you have some brilliant pipeline of AI talents out there. We see how Meta and other guys buying these talents, just like soccer players out there. So I think, again, it's all about the brand and some unique things that you can bring. But for the majority of funds, obviously, you either use this data-driven stuff to just keep up with the competition, or you just know.
Exactly. And to your point, just as a my own 2 cents on what you just mentioned regarding deep tech, I extremely agree with you. I would say. Um, I think even I was telling people, and even I wrote something on LinkedIn a couple of months ago where I said, funny enough, when we started to talk about, which is came from a VC, software is eating the world. Now I'm
Yes.
saying AI chips mainly are eating the world, and I said like it looks like, and like people they don't understand. Sometimes we have cycles in our human history where things go back to square one, and things kick off and then you go back and other things kicks off. But yeah, like because the LLMs are I would say commoditized now. Vibe coding is commoditized now. Yesterday, just for the sake of transparency, we're recording on 15th of July. Probably you're watching it towards the end of July or beginning of August. So uh, you know, I was surprised, even I come from a technical background, but how easy it is to do an MVP today, with software. If you're talking about a SaaS, it's like maybe maximum 1 hour of work and you have a full-fledged MVP. If you bring someone more technical, like someone who still remember how to code, not me, so probably you would end up like much faster. But to your point, 100% I agree on this, Cyril. Now back to the
Absolutely, yeah.
yeah, so back to the VC and data driven. Let me ask you quickly: the back testing was on US companies or was it like global?
It's global, but about 80% were US
Okay.
companies.
Yeah, the reason I'm asking you this, Cyril, like because let's say I'm based in Dubai, so let's talk about the MENA region. So if I want to get these signals, does the volume affect the outcome of data driven systems that can bring me these startups, these signals, or it doesn't matter? Like it's because like okay, we can what applies in the US, we can say it applies in Europe. I know you're based in Europe. It can be applied in MENA, it can be applied in APAC, in Australia, whatever. So how much the size of the data or like the number of startups? Because the good news is we are building momentum in the MENA region, but still we are very, very, very far away. But how this will affect a VC like myself sitting in the MENA region?
Right. So that's a great question. Actually, the number one problem for any data-driven VC or tool for VCs is the quality of data, right? And the data itself, right? There is
Right.
only a few million startups out there, like globally, and success rate is really small. So you have really a little examples to train your model on and all that. So for a niche, not really niche, it's an emergent place, really a lot of success cases like Ream, for example, went public and all that. There are a lot of success cases, but probably not really enough to build a robust, reliable,
Right.
solid model. And probably for such regions such as MENA or something else, it's probably better way to just network with the founders, hang out there and see if something is emerging. But probably you can, again, the devil is in the detail, right? So if we train the model and see some signal, that's it. But I haven't tried that. Unfortunately, cannot say the right answer. But again, data is the big problem in VC here. And the smaller the region, the harder it is to build a reliable model for that.
Absolutely, and this makes sense because yeah, we need the more we have data. So maybe I don't know, like probably in 10, hopefully less number of years. Like I'm talking about at least the MENA region, we will have like more exits. Of course, we'll
Yeah.
have good ones that happen. We're seeing some momentum also as well. I'm pretty much believing in the cross bridging across geographies, whereas because we always think that it's a M&A or IPO, uh, but I'm starting to also believe. I mean, an IPO locally or an M&A by foreign entity. I'm hoping to see like both directions, like something from Europe or like US probably coming here, making an IPO or vice versa or M&A, right? So let's see how things goes. But in general, Cyril, and you've been investing for a long time. How are you seeing the VC landscape in general? At least in 2025, I would say.
Right. So yeah, we obviously had this spike in 2020 with and 2021 probably with cheap money, low interest rates, a lot of money pouring into startups and venture funds as well, a lot of committed capital. I think it was the peak about um, and if I'm not mistaken, about 2-3 trillion in dry powder was allocated. Obviously, not everything deployed. So we see this cycle again, like coming back with hyped, inflated valuations for EA startups. Really, there's a lot of money pouring into this stuff. So again, there is like top tier funds that make most of the returns in the venture industry, and the rest of the venture capital industry. But again, in the coming year, in the last years, like say 3 to 5 years, there have been some emergent space for again data-driven VCs. There is a nice report, like industry report for data-driven VC landscape, led by a gentleman, a venture capitalist from Germany called Andre. It's called Data Driven VC. There you can see a top list of top venture capital funds using data and models to source and identify startups. So I'd say that that's the recent trend. I'm not sure how sustainable it will be. Maybe these funds will remain at the same level. Maybe they will go to be the top tier funds. But honestly, I think the Silicon Valley funds will dominate, like Sequoia, Andreessen Horowitz, all these top tier funds will still dominate because these decades of brand building, of track record building is a really strong mode, just like we described before. So I think it will be all the same in 10, 20, probably 50 years. There will be top tier funds, probably the same names as now, and all other VCs, maybe some innovators as well.
Right. So we're seeing, to your point, Cyril, about just what you mentioned at the end. We're seeing these pushes both from investors and startup founders about like making at least Europe, uh, better established on the VC map. Uh, I saw a lot of initiatives. I saw a lot of kind of, I would not call it hype, but real, people really they are trying to change things. But still, and people are keep talking, but looks to me that we go back to square one, actually square zero even, and we say, okay, it's the Valley, it's the US VCs and actually startups that they're gonna be dominating. Are you seeing any real change, any real work being done to change this? I know, like in Europe, especially, the biggest, I would say, barrier are the regulations. Are you foreseeing anything changing in the near future, maybe?
Well, yeah, especially for Europe, because I'm based here and you're very close, obviously. So there was a recent movement in some trying to make the new renaissance for Europe. There was a nice project that I support that the European VCs want to make this domicile for all European startups. So they don't need to incorporate in Germany, then separately in France, or all there is like a movement to make this combined European legal entity setup. So it will be super easy for them to incorporate, pay taxes, and also be funded by VCs from all around the world. So I think Europe is moving somewhere. Not sure about other regions, because I'm less involved in Asia, for example, or as well MENA region. But again, I think US still has this. US, especially Silicon Valley, still has this superpower of being the dominant place for new innovations, and it still has this spiral of attracting the most founders, the most VCs, capital. So I think it will still be the same case for the next decade or something. But obviously, other regions make great competition here.
Absolutely. I know, like in Europe, trying to remember the name. Yeah, so Harry Stebbings with 20
Yeah.
VC, he was trying to do something. He called for some stuff. Let's see. Establishing a pan European kind of fund. Let's see how this works in MENA region. I would say we are still in the baby phases, right? So although like VC is not something new, I think there will be VCs investing in startups for, I think, more than 15 years now, probably. We started to see exits, but I think we still need more. Like there's a plenty of rooms. But the biggest thing with VCs usually, I mean, in regions, it's not the VCs, it's not the founders. When it comes to innovation, in my opinion, this is my new theory. It's about finding early adopters, especially for new kind of technologies, right? So you need, like, let's say you and me, Cyril, we are a co-founders, and even we found a VC to back us. But if we don't have the doors open, which is a VC usually should help also in that. But if we don't have these early adopters, and I'm talking about the B2B, this is where my area of expertise is. B2C, it's a different monster, different game. But anyway, so I think this is what built also the reputation of any ecosystem. Like, yeah, innovation is important, money is important, founders are important, but we need also the adopters, the early adopters, the first believers in any new technologies. One thing I want to ask you, back to the startups, funding. From valuation perspective, Cyril, what are we seeing? I'm not sure if I'm sure you have touched on it in the paper, but yeah, okay. So we spotted good number, we back tested but when it comes to and also maybe after the paper, like what you're seeing currently, what are like now the standard valuations and returns for a startup in the Series A, Series B mainly? Because I believe the seed stage usually is standard. So I see safe notes with either 5, 7, maximum 12 million. But after that, we talk the real, serious business. I have a theory, and correct me if I'm wrong. Because the US is so crowded, so the valuations are a little bit, struggling. I see the opportunity in other regions, probably Europe, MENA. I'm not sure about APAC, I can't, but I see in MENA region, this opportunity where we'll talk about like, yeah, the valuation is less, but this is where you can do your axis later. anything, any signals you're spotting or you spotted before?
Right. So that will be a very insightful talk, I think. So obviously there is some arbitrage opportunity for especially non-US funds, because founders here locally, whether it be MENA or Europe, that can raise at some European or MENA-ish valuations, such as 5 to 10 million cap for seed or pre-seed or even seed, and then they can move to the US, right? So it always been the same, but right now we can see it very clear that, for example, a YC startup, YC is a different story, but all US startups, they raise at least 10 to 15 million cap at pre-seed, seed, sometimes again pre-seed idea stage. In Europe, you can find a very decent founder already with traction, sometimes profitable, doing some very unique and innovative stuff at much lower valuations here. So we can invest and just use the arbitrage, move these founders to the US and gain this, have these gains and valuations like immediately. So obviously, it depends on the locations. For the later the stage, for example, Series A, Series B, and beyond that, there is less dispersion in these valuations. So like European companies valued more like the US companies. For example, look at Revolut. It's a global business, but still it's in Europe, like meaning
Right.
in the UK, but it's valued at almost at the same multiple as New Bank in Brazil, working in MENA region, or other US-based fintech companies. So I guess it's already at Series E stage or something. So the later the stage, the less the dispersion in the valuations. But again, I urge any VC listening to this, use this arbitrage about like brilliant founders here in Europe or MENA region or Asia, because they still very talented and can build stuff in the US as well.
Cool. And of course, it's an opportunity for, in my opinion, for other investors as well. Like if they are running maybe a fund of fund, or so, because you need the local expertise here. But that's always insightful
Yeah.
to get these numbers and the arbitrage. I'm a big believer on the arbitrage, because as you mentioned, I've done a lot of research recently, and yeah, this is the opportunity. And the good thing is, I come from, of course, technical background, but I work in sales for some of the scale ups, and always, we're saying, for example, we have a big region, and then you have, what we call the balancing. So let's say we are committing that we're gonna do, let's say in a quarter, I'm just making up the numbers, 5 million ARR, right? So, and we expect like country A would do, let's say 2, country B would do 2, and country C would do 1. I'm just simplifying it. And what happens, like in a magical way, is that, yeah, country A doesn't bring the 2, it brings 1. But you see like country B, because they had like a moment, right? So they cover on that, and the other country, they do just as what they forecasted. And I think this applies even in this context we're talking about, because if you're having this arbitrage, so of course you have the big upside, and at the same time, if you're like doing this in 2 geographies, like something bad happened here, like that can cover it up. So food for thoughts, as I say. But yeah, you're absolutely right. Cyril, you mentioned about deep tech. Other than deep tech, what else you are having, like, I would say, big bets or big expectation from it, from industry perspective, in the tech, of course?
Right. So obviously, a hot thing right now is defense, and like some related to that. Again, it's all about deep tech, because software, I guess we already have all defense software that we need. For example, Palantir does something for that. So again, it's all about deep tech. It can be different kind of deep tech, healthcare, biotech. Biotech is big stuff, because again, I mentioned before off the record that I've been running this morning. So you can just see the numbers, how people start thinking about their health about their well-being, and you can see how numbers grow in at the races, for example. More and more people each year run marathons and all that. So I think healthcare biotech is a really big thing right now. You can
Right.
just simply see the momentum here, and it's all about deep tech. Software cannot heal your brain, your heart, cure cancer and all that. So it's all about deep tech, but different kind of deep techs. And also big bet on space tech. I think it's a very important industry as well. Elon Musk is doing a great job. Once we have the Starship and all these low cost launchers that he promised, I think we're going to see some very good stuff out there, because again, when we order something, when we even pay with the card, it also requires some space tech technologies. For example, your card that you're paying, your chip uses this satellite GPS connection to
Right.
double check if you haven't paid somewhere else at the planet. So I think space tech, it's also about deep tech, but AI is obviously about software, but it can be combined with hardware, again, with some deep tech. For example, robotics. You can see robotics is a very hot topic right now. Tesla, for example, is doing some robotic stuff, and all other companies you can mention. So I think these are the hot topics right now. And if I were a VC or even LP deploying some money in the new technology space, I'd have these bets in my portfolio.
Absolutely. Like again, just today at 15 July, like actually I prepared that yesterday, and for the transparency, I use AI a lot for my deep researches nowadays. But the good
Right.
thing, it brings the right thing. It doesn't make it up, right? So deep research, it shows you even the link, so you can go and check. So I manually go and at least check the source. I don't read the full thing, but yeah, like okay, it's a legitimate source. So to your point, and let me just, I'll just to not give wrong numbers. So the finding just in deep tech, right? And with robotics, so the numbers doesn't lie, right? So the global robotics market projection by 2023, it's gonna reach $178 billion, almost 179, right? And the CAGR is 16% year over year, right? The deep tech, it's also like going very, very big. So we're talking about really, really like high technology where robotics is embedded with AI, and it goes to all the sectors that you just mentioned, because space tech would need this. Defense tech, by the way, it would need this. Uh, Biotech and health tech. I started to see, even I was lucky enough to meet some founders in deep tech, which are doing something you never thought that this is impossible, right? Like battery technology, heating technology, all these things. And people, they underrate, I think, this sector. But for me, it's not only about the returns, it's also about the impact, right? And like these are really cool technologies that are coming up, which is, and this is where I gonna relate to almost, the last question that I had today, Cyril. Uh if we have angels, why we need VCs?
Right. Right. So, well, I think we should have both, right? Because angels sometimes cannot back companies at later stages, and also it's sometimes just easy for them to give money for fees to manage them and invest in startups, because angels obviously don't have this like helicopter view at the industry. They just meet occasionally founders, they believe in them, and there is a lot of more different incentive rather than just um, simple returns that VC is looking for, right? So they want just to support their friends, their strangers they meet, and all that. So yes, it's a good question. I think at early stages we can live without VCs, but it's not the case for later stages and probably sometimes overall. And by the way, there is also another, if we come back to the main topic of the discussion, is data-driven VC. There is a nice group of people who build this first AI angel investor who just finds the
Wow.
founder, talks to the founder like online, and then wires the money. So I can introduce it to guys. It's called No Cap it's supported by Y Combinator and like group of people
Nice.
around that.
Similar
So
to
yeah,
Bordy, I believe, like similar to the concept of
yeah,
Bordy, but I think I saw it somewhere. Yeah. It's super
yeah.
cool. So the reason I asked you, Cyril, this question, because again, I'm trying to, so the folks who listen in the US, I'm sure you 100% got it. So for the folks in other regions, especially in my region, I'm seeing this, you go to angels, but the thing is you are asking your angels large amount of money. And just for you to know, correct me, Cyril, if I'm wrong. I don't have statistics from Europe. I have it from US, funny enough. So when you talk about angel investments, so I would say it's in the range of 10 to 25K, maybe rarely 50, very rarely 100K and above as an angel from one single angel. I'm seeing MENA region founders going to angels and asking like 150, 250 for seed round. Guys, don't do it. I know you have issues with the VC space. I know like we need to do a lot more work in that space, but understand that angel round, of course, by the way, you should not be raising more than, correct me, Cyril, like how much is an angel round in your opinion? Like, let's try to make it global. Or let's talk about maybe Europe. Like, what's an average angel round in Europe?
Well, I don't have numbers at hand, but I th-
Best
I, th-
practice.
I think it's like a few 100,000
Right.
as an angel round. So there's like a bunch of angels putting this money. Probably there is some distribution, some big super angel. But yeah, you're absolutely right. The majority of tickets that coming from angels, again, differ from a few K to, I'd say, a few dozen Ks, right? So it's max, like at average.
Yeah, because I've seen, just for the sake also of transparency, I don't, invest currently in European startups, but I try to see if I can help by any ways. And, I see this difference between, the asks, which is very reasonable. So, I talk to founders from Europe, in all regions, by the way, UK, Central Europe, Germany, Poland, and in the Baltics also as well, and as well as from the emerging Europe, I would say, like the Baltics and other regions. So the numbers are very, very, very normal, and like the check size is very so. I'm seeing MENA founders doing this mistake. I can't blame you. Don't get me wrong, but I think we need to have the angels. Why? If we get the angels in the right check size, and if you go to the route which every single successful ecosystem have done it before, then you go to your VC, and of course, hopefully, we will have more VCs investing in seed rounds, so you don't have to get your angels write these checks, because remember, angels, yes, there are people who trust you, and usually they might be able to move things, but VCs, and thank you, Cyril, for mentioning about the three things you do, right? And when you said like, so they fundraise themselves, they deploy, they search, they scout for startups, and they have to make it successful, right? And making it successful, this is what a real VC does. So they should help you founders with your go to market strategy. They should be able to even help you in hiring. They should be able to help you in the operation stuff. Of course, not the day-to-day operation, but at least the overall, the strategy, getting you connections, establishing partnership. If your VC or your you know investor are not offering anything and just opening the phones asking you about your update, okay, no comment. Right?
Yeah.
So, but anyway, this was good, really, Cyril. To your point, all the links, of course, will be in the show notes, the paper, the link to the tool also as well. Anything you want to leave us with before we end today's episode, Cyril?
Right. Yeah. Yeah. Probably just it's a good morning, right? It's a good summer. Wishing all the best to all our listeners. And yeah, please remember we live in good times, new technologies, like a lot of opportunities. So a lot of founders and VCs listening to you. So yeah, I guess we will have a lot of good stuff, good technologies and startups coming. And yeah, let's just enjoy the moment.
Absolutely. I love this optimism. I'm optimistic also myself. Uh, you know, my word here, and I don't usually do it much, but because you mentioned this, Cyril, yes, We are in summertime, a little bit hot here in Dubai, but everything is gonna be okay. Everything is gonna be good, and just believe the process, guys. And I'm talking here to founders more than VCs, honestly. I know I feel your pain, but hold steady. I think things gonna change very, very soon on a very large scale. And again, for people who are coming from outside to this region, also hold steady. I know what you're feeling, but things would change, and vice versa also as well. Cyril, I really enjoyed this conversation with you today. It was a very good kind of not only discussion, it was like thought provoking for me, at least some of the numbers, the facts, the talk about, the new trend of technologies, about software, not like before, like with AI, the dynamics are changing, and back to deep tech, which is also I'm a big believer in. So thank you for shedding this light, and everyone go check the paper, check what Cyril is doing. I will leave also Cyril, your LinkedIn profile also as well if someone want to get in touch. And this is usually how I end my episode. This is for the audience. Guys, if you just discovered this podcast by luck, thank you for passing by. I hope you enjoyed it. If you did so, give me a small favor. Subscribe, share it with your friends and colleagues. We're trying to do an impact. We're trying to spread knowledge, get connections, and see if I can, with a small effort, a small thing from my side, if I can help. And if you are one of the people who keep coming again and again, thank you for doing so. I really appreciate your support. I appreciate your feedback. I appreciate what you're doing for the show this year, starting around February till today. We are in July at the time of recording. The podcast is doing fantastically well. We are on a very high trajectory growth in the audience size. We are getting in the top 200 charts across multiple countries. The last I checked, it was 8 countries at the same time. Let's try to break the record and make them like 9 or 10 before the end of the summer. Thank you very much. This cannot happen without you, the audience, and of course the guests, yourself included, Cyril. So thank you very much for being part of this journey. And as I say, stay tuned for a new episode very soon. Thank you. Bye-bye.
Hit that subscribe button, share the show with your tech-savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.